It was in the Pittsburgh summit of the G20 when there was a clear reference about the need to improve regulation, functioning, transparency of financial commodity markets to address the excessive commodity price volatility. And since then, not only the European Commission, but other institutions, UNCTAD, FAO, IMF, OECD, they have produced several reports, and also the Commission has produced several communications dealing with this topic, trying to analyze what is behind. And it was in February 2011 when there was the last communication from the Commission on these issues, where it was stated, acknowledged that fundamentals, including unexpected changes in global economic conditions linked to the strong growth in demand of emerging market economies, have played a key role in driving developments on commodity markets. And it was said at this time that the strong correlation between positions on derivative markets and spot prices is difficult to assess in a fully and comprehensive manner. It's difficult to assess all these interactions and the impacts of movements in the derivative markets on the volatility of the underlying physical markets. So, from the Commission side, we understand that both spot and derivative markets, they are moved by fundamentals. Market fundamentals are key, but we see that it's not only the market fundamentals that drive these markets. The financialization of the commodity markets has made these markets to grow in volume, to grow in terms of participants, and then the fluctuations and volatility of the prices have appeared in a more evident and more frequent way. We, from the Commission side, and have taken into account also the debate at the global level, we consider that what is crucial in order to better understand the functioning of these markets is to increase the transparency, both on the fundamentals, on the physical markets, and on the transactions, on the, concerning the financial markets. And we consider that any regulation should ensure that the markets remain efficient with sufficient liquidity, that the necessary transparency allows for an efficient price formation mechanism, and that there is an optimal allocation of risks in order to prevent market participants from moving to less regulated markets or from manipulating these markets. This is the reason why in the Commission proposal we have focused on 5 key areas in order to regulate, in order to fulfill the G20 commitment about addressing this excessive commodity price volatility. And in this regard, we have introduced a general measure that it's not only focused on commodity derivatives, but on derivatives in general, which is the introduction of pre-trade and post-trade transparency requirements for these derivatives. Also, we have in our proposal included the G20 recommendation about the mandatory trading of derivatives, of sufficiently liquid and standardized derivatives in organized venues, and also discussion we had on OTF in the previous session. And we have at EU level already adopted the regulation on OTC derivatives, trade repositories, and central counterparties that will help in terms of the post-trading obligations concerning all derivatives. In particular, concerning commodity derivatives, we have introduced some measures that already exist in the US. This has been mentioned by the keynote speakers, that if there are in some markets and we see that they work, why don't integrate them here? One of these elements is the position reporting by type of traders. Then we have introduced in our proposal the obligation for trading venues to introduce position limits or alternative arrangements with equivalent effect. And these measures are to be introduced in order to preserve market integrity and support orderly pricing. In order to do so, we know that there have to be some exemptions, and this is envisaged in the legislation, and now through the negotiation it's further specified in order to make sure that the Commission, when developing the delegated acts, will have the necessary framework, as mentioned by Mr. Ferber in the previous session. And we have strengthened the powers of competent authorities, because it's not enough to have transparency, it's not enough to request the trading venues to impose position limits. It is absolutely necessary that the oversight by competent authorities is strengthened. And the two other elements that we have introduced is the fact of regulating professionals that are providing investment services on a professional basis in the same manner than other professionals they do. Because as you know, for instance, today there is an exemption in the MiFID for commodity derivative specialist firms, when in reality what they are doing is to provide investment services on a professional basis. And we have reduced some of the exemptions concerning these commodity derivative markets, because we consider that it is too important, this area is too important to leave it out of regulation. And as I mentioned, being transparency one of the key elements, all these transactions should be really known by the regulators, but also by the markets. And the last element is the issue related to the market abuse regulation. As you know, we are also reviewing the market abuse regulation, and it's there where we are broadening the scope in order to make sure that it is not possible, it is not allowed, or it is sanctioned if someone tries to manipulate the physical markets through the financial instruments, or the other way around, because the other way around would be possible. So this means that competent authorities, regulators, and also at ESMA level, they have to strengthen a lot their knowledge about these markets, and they are doing so. ESMA has already created an internal task force in order to be ready once the European Parliament and the Council will have finalized the negotiation, to have the necessary knowledge to go ahead with the technical standards and delegated acts. And again, just to finalize my short intervention here, for us, the introduction of this more transparency, better oversight, regulation of all market participants that are dealing on a professional basis in these markets, mitigation of market abuse practices, of abuses practices, all this is in order, again, reminding the principle that has been mentioned at the beginning today, this morning, by all the keynote speakers. It's to ensure that these financial commodity markets continue to serve the real economy, and that these markets are efficient in order to help price formation and allow the hedging of market risk, but not this over speculation, or what the G20 in Pittsburgh agreed, the excessive commodity price volatility should disappear. So this is, from the angle of the Commission, a justification of how we have put forward this initiative. Thank you.
Thank you very much, Maria. Can I just ask which of the proposed, it appears from the reading I've been doing that position limits is the most controversial of your proposals. Is that the feedback you're getting?
Well, actually, I can tell you that on the element of reducing the exemptions, this is also very controversial, because there are some market participants today that, according to the legislation, do not have to be authorized, supervised, and therefore now with the new proposals they will have to, and it's quite controversial for them. But on the position limits, yes, we know that some venues, as Judith explained, already impose position limits, but it's something which is new. And of course, we understand that the uncertainty today about what will be the level of these position limits creates additional debate. But that's the reason why both the European Parliament and the Council, they are trying to introduce criteria in order to better frame this power that at first instance the venues will have, but that the Commission will have to harmonize through delegated acts. Thank you.